Welcome back. You're watching Trade of the Week. Today we bring you technical analysis on the Satrix Resi ETF, Exxaro and Kumba Iron Ore. Rob Pietropaolo, who's co-head of trading at Unum Capital, joins us with that analysis. Rob, hello. Thank you for your time.
Thank you very much. You might have noticed there's a bit of a theme today.
Yes. I thought you did that on purpose, no?
That's right.
Okay.
Yeah. There's a bit of an opportunity that I've spotted, and I think resources give a bit of value. So if you want to kick off, we can kick off. So just resources in general. I've chosen the Satrix Resi because it is a nice tradable representation of the resources index. Nice little pullback from around April because it had a massive run up in March. And it's getting to a very interesting level now. If we just look at the chart, you'll see that there has been a little bit of weakness. It had sort of in August broken below its 50-day moving average, and then yesterday and the day before it's broken below its 200-day moving average, which is generally bearish. However, I think it's close enough to that 200-day moving average to gain some support, sort of at that 58 Rand level. If we look at the momentum or the stochastic oscillators, they also showing that the Satrix Resi in general is quite oversold at the moment. So I think this is quite a good buying opportunity. And I do think, looking at the run that the financials have had, we might just start seeing a bit of a rotation into some value, because now the euphoria of the elections and all the economic stuff is out the way. I think investors might start looking at some value opportunity here. If we look at sort of the potential upside, if we do find support at this 58 Rand level, and I think it's trading there this morning actually, I wouldn't be surprised if we got a little bump back up to sort of that sort of top-ish level where it bumped its head just under $70. So I think for the next couple of months there's probably about 15% upside if you're willing to sit on your hands for 3 months or so just before Christmas. And who knows, maybe you can still catch a Christmas rally and add on to that later.
Very interesting, Rob. I must ask you here, when we speak about this and time it with interest rate cuts, supportive of the story?
Well, you would assume so. Yeah. I think resources are very dependent on a weaker dollar, yeah. Which I do think is the case. The US is pricing in a 25% chance of a 50 basis point cut, which probably gives you about a 50% chance of a 25 basis point cut. So I do think there's an opportunity, and resources tend to run. Also, in terms of the other stocks that we're going to be looking at, we've also had 120 odd days without load shedding. Yeah. So that bodes well for production on that side of things. So yeah, I think this is an opportunity, and we'll see as we go along the theme as well.
I actually want to move on to one of the next stocks, Exxaro. It's a account that I actually like. I've always liked Exxaro, and I've really liked the fact that they were forward-looking, looking also at becoming a future fit. And I'm wondering, if we can touch on that story while we also, of course, speak at the performance of the stock.
Yeah, so if you look at the technicals, that pattern looks very similar to that resources chart that we just saw. The only difference is it's taken much more of a hit past those moving averages, the 50 and the 200. But it has found a level of support, and this is quite a significant support, and this goes all the way back to sort of June last year, besides for that blip. We did start seeing some new buying coming into the stock yesterday, and again, like I said, the pattern is very similar, extremely oversold at the moment, and even if you're a sort of a fundamental investor, I think Exxaro is trading on a PE of like 4. So if you're looking for value, I think now's the time to look at that. And again, buying it this morning, I think you could have picked it up at around 155 Rand, which is close enough for me, and it's a better price than we've got on yesterday's close. You're also looking at about 16 to 20% upside in the coming months, and I'd be chuffed if it just went back up to test that 200-day moving average. So you wouldn't even need $180. I think 170, 175 is a good take, and take some profit there to buy your Christmas presents with.
I love that story. Let's talk about Kumba. I was going to touch on that one. Kumba is also fascinating for me. It's the one count that Anglos wanted to keep. BHP said get rid of it, and Anglo said no, absolutely not. So it tells me that there is still a good iron ore story that we have globally, even if China is a bit weak at this time still.
Yeah, China is still slow. What they have managed to do is avoid a hard landing. Kumba makes money at the current at the iron ore price, but if we just zoom out on this chart, Kumba's trading today at a support level, again ignoring that blip, all the way back to 2019. So this is a very strong support level from a technical point of view, and over that time period it's also quite oversold. Let's not forget Kumba also normally pays a healthy dividend. They did slice it a little bit this year, but investors are still getting paid. If we look back at what's happening on the daily chart, so that massive support level that goes all the way back to 2019 still puts you at around 340 Rand. 340 Rand to me, I think, is a bargain, because just like Exxaro, it's also trading on a PE of 5 or 5.5, which offers great value. And if you compare that, like I said, I've already started noticing a little bit of rotation out of financials, but also if you look at the run that the retailers have had, if you look at stocks like Shoprite, they've had a massive run. They're trading at 21 forward PE, looking very expensive. So I think now is a good time to start looking for some value. And again, also looking weak, below the 200-day moving average, below the 50-day moving average, looking extremely weak. But this level has been going back for 5 years. So I'd be very confident in picking them up today, this week, and wouldn't be surprised if we got a nice little bounce back up for about a 25% return in the next couple of months. I think 430 is fair for Kumba by the end of the year, based on some of the fundamentals as well, pick up in global economics and from a technical point of view as well.
I must ask you here, Rob, when we look at the three counters today, and maybe we can call the ETF a counter, I don't know if we should, but looking at the ETF as well here, that a little bit more of a mixed bag here. Exxaro, more focused, I think, on coal and a little bit of resources. Kumba, of course, iron ore here. Might it be better to be in a place of more diversification, or okay to be in one of these ones, Exxaro, Kumba, considering also the PEs that we've discussed here, just cheaper?
Yeah, 100%. I've got no problem with picking up miners like BHP Billiton for that diversification. Just from a technical perspective, I just think that Exxaro and Kumba especially offers the best opportunity now. This is trade of the week, not trade of the year.
I get that.
So I think trade of the week, I think you can't go wrong with the counters. That, and in fact, I think you can diversify across if you don't want to buy the ETF on its own. There are a couple of opportunities coming up, and these are the best ones that I've found this week.
Another interesting one that we keep hearing is that South Africa's mining industry is dying. I've spoken to mining analysts who believe that we're never going to get it back. It's just absolutely gone. It's gone to the dogs. But you are saying that in this season, in this time, there is some value here. Might it be a sector that does need you to map out a little bit more than you might in another sector?
Look, it's no secret that our miners are looking to exit. We've seen it with quite a few. We're still selling our commodities in US dollars. I think that when it comes to like the Anglo stable, we've already seen their exit, and they got very close to selling out to BHP Billiton. So that's a very much an externalized story. Kumba, still very much a South African company, and like I said, once we get the infrastructure around the delivery of iron ore and coal and all those other commodities right, which I think is coming right. We're seeing Transnet and our rail starting to improve. I think this also will turn or reflect more delivery, better profits, and I think Kumba's probably the best opportunity at the moment outside of the diversified stable.
And then, Rob, talk to us about the dead cat bounce. I think that's interesting.
So I thought I'd go light on the educational section. So there's an old saying in financial markets that if you drop a dead cat from high enough, it will bounce, and that's the premise of a dead cat bounce. I've just illustrated here. There's the 2000 crash of the Nasdaq and the 1929 crash of the Dow Jones, and you can see all those little blips down, the 1, 2, 3, 4, all the way down to 7. So in essence, what a dead cat bounce is, it's a short-term recovery in a declining trend. So how they happen, nobody really knows, but it's probably guys that are covering short positions,
Okay.
or guys trying to bottom pick, how far can this go down? And you normally see a little bit of buying or guys looking for opportunities in a declining stock. So it's really difficult to determine whether an upturn in the market is a dead cat bounce or an actual market reversal. So guys are always looking for those opportunities in the market. And sadly, you'll only know it's a dead cat bounce once you've bought the stock and it continues going down. But like I said, that normally happens after the fact. You'll know you've hit a dead cat bounce once the stock hurts you. But I just thought, because it's not an easily predictable phenomenon, and we'd go a little bit light this week, a dead cat bounce is just a nice term for the novice or the new investor. When somebody laughs at them and says, oh, you got caught in a dead cat bounce, now they know exactly what it is.
What's also very interesting about this is when I think of a dead cat bounce is, of course, you said it's trade of the week, not trade of the year, and I won't forget that, Rob. But let's talk about that, and even in some of these stocks now, of course, if you are already in one, might you find one at this time? Not?
Well, it can happen.
It can.
We've seen it happen across, especially the resources. If you look at the price action of all the stocks we spoke about today, there's been little dead cat bounces in between. Fortunately, we know what a downtrend looks like, but we also know what support levels look like. So we prefer to buy breakouts and support from a technical level. And if the chart supports it, the older saying is the trend is your friend. Yeah. So we tend not to bet against it. And I like rather trading with the trend than being unlucky enough to catch a dead cat bounce.
And then I also wanted to ask you about Kumba here. As we know, we're not the biggest player of iron ore in the world, but we are one of the best quality producers here. When I think of just Kumba's fundamentals and how they're trading at this time here, is it still the kind of company, Rob, that we can expect to see do well without China buying that good quality coal? Because there's other producers who produce more. It's cheaper, but it's more, and it's more.
Look, China is a very important market for Kumba, but there are other supporting factors. As we go into summer, Europe goes into winter. Yeah. And if we remember what happened, especially during COVID, just how much iron ore and coal we were exporting to Europe. So I think Kumba's got a lot of other support. Definitely need China. You never write China off because they are our biggest customer. And when your biggest customer buys less, you make less. Yeah. So that is a concern. But like I said, there's other supporting factors.
Other supporting factors. Okay, and then before I let you go, I want to touch on Exxaro's renewable story. And like I said, it's one of my favorite stories, but I don't know if that's coming online as quickly as it can. I could buy Exxaro today and sell it in a week, or I would decide to keep it for a little bit longer. But then I wonder just about that story.
Yeah, look, there's no doubt that these stocks tend to be the most volatile. Your resource counters. Look, I think Exxaro is one of those stocks that you can buy today and sell on Friday. Okay. The renewable part of that business is going to take time. But I also recall when we were given a deadline to move off of fossil fuels, that's been moved further out onto the horizon. And again, I'll touch back on Eskom. We've had power for 120 odd days now without interruption, which means that they're not burning diesel, they're burning coal. And if they're burning coal and they're selling electricity, they're buying it from somewhere and they're paying for it. So I think the rest of the year bodes well for Exxaro.
Well, Rob, so we have time for today. I'd like to thank you for taking us through Trade of the Week today.
Awesome.
And that was the co-head of trading at Unum Capital, Rob Pietropaolo.